It's Monday, January 25th. This is The Street Live. I'm Katherine Ross, and I am joined by Jim Cramer. Jim, what are you watching in the markets this morning?
Well, I think that there's this trade that people kept talking about, which is out of growth into value. Now, I did not like this rotation because I always fear at the beginning of the year, the animal spirits make people raise numbers for value that are therefore too high. I think that that could happen. In the meantime, the growth stocks are back, and the growth stocks, just so people understand, when I say growth stocks, I'm talking about, for instance, tech and healthcare, and whether it be a Regeneron up 9, sorry that I have to look at these, or whether it be a Teladoc up 25, or whether it be even a Sam's, which is Sam is kind of funny because that's actually a hard cider. That's what people like. But it's Boston beer, but don't be confused. It's hard cider, and that is one of the things that a lot of people like. So what I'm looking at is just an amazing transition on the fly into the out of the value and into, even to select tech and healthcare, but not much beyond that, except for Boston beer.
Now, Jim, there's another thing that you're looking at that you haven't mentioned yet, and that's GameStop. We should tell everyone that they need to go ahead and read your Real Money column over on realmoney.com if they haven't already on GameStop. Originally, Jim, I was going to ask you just about GameStop, but you actually brought up a really good point, which is GameStop's up about 90% right now to $123 a share. Bed Bath & Beyond is up 50% to $45 a share, and then we've got B&G Foods. Jim, what is going on here? Could you consider this market manipulation? And are we going to see more stocks go up like this?
Look, this is an absolute great question. We're going to take each one individually, okay? We're also going to address what's going to happen with children's calls. Now, what's happened is that there are people on Wall Street bets who have figured out, and it is Wall Street bets, they've figured out that the short positions, people who have shorted certain stocks, are not are out of line with what can happen. Now, this all started with a very good investor taking a very big stake in GameStop. This fellow Ryan Cohen. Ryan, now let's get this really right. He joined the board last week. Okay, he made people feel that perhaps GameStop is going to make its way back. Now, GameStop had been pretty much literally an annuity short. Again, sorry that I'm looking at this, but I want to be sure of the dates. But when it closed on a record high last week, and that was entirely, and you see the whole volatility, because of a very odd, and I'm going to explain it with the help of Timothy Collins, who did a fantastic piece for Real Money. There's two things happening here. One is that there is a very big short seller in the name, and that short seller was pretty convinced that the company may go bankrupt, okay? So in other words, going for a zero, all right? And that short seller is part of a group that 140% of the float is short. Now, theoretically, that's not possible because there's only 100% shares. But you can get away with, for a short period of time, shorting a stock and in borrowing the stock, because remember, you have to borrow the stock before you can sell it. But right now we're in a situation where there are not enough shares. There is some float. Actually, I shouldn't say not enough shares. You can borrow it. But there's something else at foot here, Catherine. People bought calls at levels that, frankly, no one ever thought would ever come into the money. They did. The market makers and companies that were shorting these calls were unprotected. So they come in this morning, and also a lot of people were long the 60 call. Long the 40 call, short the 60 call. Excuse me, that's Timothy Collins. So what they're saying is those also the 60 call was bought in, meaning that there was literally the market makers had to go cover. They make them cover. The exchanges make them cover. So then you had these people who own the 60 call, and they're in luck on that, but the people who sold it are just dead. So you've got market makers who are just crushed. Maybe we expect some to go out of business. We have short sellers who are crushed. I don't know how they survived this. So it's up 72 points. So then the question is this. Is this market manipulation? And the answer is very difficult because the law is pretty clear that you have every right, First Amendment protection, to say that you think a stock's going to go higher if you think so. And the way you got to look at this is, let's say you're a GameStop analyst and you said this stock is worth $200. Well, no one is going to come in and say, hey, you can't do that. It's just a way of life. You're allowed to do it. It's covered by free speech. So this is one of the most amazing short squeezes. By the way, this is much more than, it's like a Tilray writ large. So that's GME. Now I'm going to go to Bed Bath & Beyond. Bed Bath & Beyond is a company that I have a lot on Mad Money. That they hired a guy named Mark Tritton. He's very, very good. And they hired him from Target. This was at the behest of a guy named John Duskin, Misellum Capital. They made a kind of an attack on the board. They got the board replaced. Tritton's come in, and he's really changing it. And he's lowering the prices, and he's doing a much better job. But people chose not to recognize the changes that Tritton had brought, and they stayed short, again, thinking that this company had to be wiped out by Amazon. Well, there's 67% of that float is short. Now, Katherine, that's impossible. The people who are short it, they have to cover. And they have to cover now because there's nothing really wrong with Bed Bath. They're doing okay. So that stock is up 15. All right, now let's go address B&G Foods, another company that I have on regularly on Mad Money. There's a short position of 36%. B&G Foods does a series of acquisitions. That's what they do. They're very good at it. There's absolutely, yields 4.8. It did have a change in CEO. Now Dave Wenner, who used to be the CEO, is back. They haven't really extended the balance sheet. They're a really good company. They have a lot of older brands that they reignite. I mean, think like Melba Toast. And this thing is on fire. Why? Again, because of the short position. I can now predict, because I watch the way these guys act, that Children's Place, the short position there is 37%. Now, they're not doing as well. So the question is, will the people at Wall Street Bets run that stock, even though it's not doing well, when they may not have enough power to do any more? They're doing BlackBerry, thinking that it's this great software stock. And there's not a big short position here. So let's put it all together, Kevin. What's happened is a new generation of investors have joined in an old way. Yahoo Finance did this in 1998. But these people have decided, look, these companies are good, and they all cheerlead. Now, I am sure the GameStop shorts would love to bring some sort of suit, but there's no real grounds. Will the government get involved? What are they going to sue? Are they going to say that everybody, it's an in-concert manipulation when it's really just kind of free speech? So this is one of the wonders of the world, Katherine, and therefore I hope you can cut each one of these on Twitter so everybody knows what's going on, because I intend, like my GameStop piece on real money, to have everyone understand why this is happening and understand whether they should do it or not, given what I have said.
Jim, I have one question for you before we move on to another topic. Do you think that these Wall Street Bets and Robinhood investors have changed the psychology of the market?
Very much. I mean, I think that one of the things that's happened is that we have always relied on Wall Street research as being the principal reason why stocks go up. So what happens is Wall Street analysts, Apple, they all make their projections for what Apple's going to do, and then if the projections are exceeded, Apple goes up. Today, Apple's up big. It's up 5 because there's got 5 different analysts raised price target. So there's a sense that, wow, and by the way, Apple's at all-time high. There's a sense that Apple must have some sort of blowout. And so that can go up because of Wall Street research. But that's not nearly as important as the concentrated buying by people on Wall Street Bets. Let me shut that off. This is my wife because I'm having a problem. Lisa, I have to call you back. Sorry about that. This is kind of bush league. But I had to do it. I'm having a problem with my hip, and I have an MRI tonight. Total disclosure. And my wife is trying to figure out whether to go with me. There. You got the whole picture. Look, I always do honest videos here. This is not like TV. I try, I had it on. The mistake was made because I'm trying to get my wife to go with me to the MRI. I hope it goes well, but, sometimes you want to do, you kind of want to hold hands when you're going to an MRI. But anyway, you get that one way, just to backtrack and get away from what my wife was saying. You have Apple, all right? This is just pure Wall Street research. It's what's going on traditionally. And then you have GameStop. There's no analyst recommending GameStop. As a matter of fact, we got a downgrade from Telsey today. No one's recommending Bed Bath up here. No, the piece of research we saw in Bed Bath was basically they're getting more competitive with Amazon, but don't get carried away. And there probably won't be anything for B&G Foods. It's very lightly covered. So you come back and you say, wait a second, is this nuts? And I said on CNBC, does it matter? In other words, does it matter that GameStop, which brought in this guy Ryan Cohen, who's the genius behind Chewy, does it matter that he bought 15% of the company, got added to the board? Well, if you're short this stock, which is now up 82 points, you simply have to say, am I going to be in business? In business, because I've shorted this, I got to find stock, I have to cover the stock, I have to go, maybe the analyst can go and buy. Oh, look at this. Bed Bath, in the time since I've been talking about it, it's now up 16 points because 67% of the people are short. So make no bones about this. The Wall Street Bets people are looking at the short positions and attacking the shorts in a spectacular fashion, which tells my viewers, our viewers, that if you are short, please be aware that you may be under attack, and hopefully not physically. But I want you to be sure that if you are in a position where you are heavily betting against the stock and others are with you, they may target you next.
All right, Jim, besides for what's going on with Wall Street Bets, there was some news around vaccines this morning. We had Moderna saying that they're working on the booster shot against the South Africa variant of COVID-19. The vaccine does look like it's effective, but this booster shot will actually make it more effective against the specific variant. Does this give you hope in the response to this ever mutating virus? And if I'm an investor in Moderna right now looking to build my position, should I take action on this news?
Okay, so Stéphane Bancel said those things, and I think I got the first Moderna, and I get the second in, let's count the days. I get the second in 15 days. And I was hoping that we would see some sort of this statement that there would be absolutely nothing needed besides the booster. And I think that he kind of finessed that. Stéphane is a terrific guy. What is Clorox doing up 20 points? What the hell is going on? Stéphane is a terrific guy. But I really feel there's no reason why that stock's at all, other than maybe Kimberly. But I do think that you shouldn't buy the stock on this because he's basically saying, hey, listen, we have to do a booster. And so what? I mean, that's do a booster. It's not a good reason to buy. There's a lot of stocks, by the way, I don't want people to chase. Kimberly up $8 on a good organic growth number. Clorox up 20 points. Now, why is Clorox up 20 points? There's a 10% short position. And people are betting that the people who are shorted are going to have to cover. So you go to Wall Street Bets, you take a look at these things, you see if they're about to go after you, and you recognize that if you are betting against a stock, Katherine, this is really important, I want you to switch from common stock to puts because you can't afford the risk that you are going to be in a part of a short squeeze. And again, it doesn't matter if it's orchestrated or not, Katherine. The short squeezes are so real. And the Wall Street Bets people are coming for you. So please, if you're short, make the change. Go into puts. That way you limit your loss. That's what matters.
Jim, something that kind of ties into all of this is your no huddle offense from Mad Money on Friday, because while you focus on the fundamentals of companies that are back in play, you also mentioned that younger investors put their stimulus checks to work. So based on the conversation that we're having, Jim, if these younger investors are watching, if any Wall Street Bets investors are watching, what advice do you have for those looking to put their stimulus check into the market when they receive it?
Okay, that's a great question. And these people tend to use Reddit as their research department. There isn't any real research for these people. They do a lot of research on their own using Google. What I would do, I know this is self-serving, but we cover these things at actionalertsplus.com. We really do. We are the way for these younger investors. We teach every day. This is the way for younger investors to find what are the sound stocks. A lot of the stocks will fit the parameters. No, we're not going GameStop and Bed Bath. If you want to do those are fine, but those are dice rolls. Who knows when the shorts are done? They've obviously been fantastic, and I salute everybody who has made money on those. Because remember, I am pro-investor, and the people who have made money, you know what? I don't see anything illegal, and I'm thrilled for them. But if you're a younger investor and you're trying to get invested in the market, You want to have a mix of things like a Ford, which we own, a Wells Fargo, which we own, NVIDIA, a Marvell. You want to be in those, maybe Bristol Myers, and then you can go avail yourself of a Regeneron or a lot of the stocks that people ask me about that are small cap biotechs. Those are fine. And then you want to be in some really conservative stuff that you can use in order to be able to buy. And this is like, I'm not being conservative for these guys, but we've been up. And I want all these people, the Robinhood people and the Wall Street Bets people, to have a little cash. So if we do go down this week, they can buy. So my advice is subscribe to the club. Get in the club. I will teach you. You can ask us anything. There's nothing else like us because we're not Wall Street. I know someone was saying on Wall Street Bets, Cramer's just Wall Street's a suit. I wear a suit. I am not a suit. So I think that that's the best way to learn. I don't really have much beyond that because I'm probably the only guy that writes for the regular guy because I've been the regular guy before I got made money. And I'm fortunate enough to remember what it's like to be the regular guy. And I am for you.
Jim, last week, speaking of you being a regular guy, last week you could not contain your excitement about Ford, and today we learned that the Tesla Cybertruck has actually lost out to the electric F-150 in a consumer survey. So what does this tell you about the race for the all-electric pickup?
Well, look, I think the world of Jim Farley, who is the man behind the changes at Ford, and he's going to get out of he's still going to sell, but get out of manufacturing areas that he can't make money. But I want to make sure that everybody understands, because the stock is up phenomenally, that this quarter may be hurt by warranty issues. There have been nagging warranty issues over previous Fords that Jim Farley had nothing to do with. You're going to see a charge. Now, maybe that's why the stock is getting hit today, down 4%. But I want people to be prepped for that so that if it does go down on the warranty news, they're ready to buy more. So what do? If you're up on Ford, we thought that those who are trading oriented for action alerts, we give them, we say it's a 2. You absolutely have right to sell it. We can't balance you to anything. But I just want people to be aware of the warranty issue because it's significant.
All right, Jim, we are about to head over to our Action Alerts Plus Daily Rundown show on actionalertsplus.com. But before we do, I actually have a question about Apple, which was your mad dash this morning. You say that Wedbush's Day and Ives this morning had a note saying that he expects eye-popping iPhone unit results. You always say don't own it, don't trade it. It's also a very busy earnings week. What are you going to do to approach all these earnings?
Look, I hated these analyst reports because I say own it, don't trade it. What happens is they raise expectations to a level that Tim Cook maybe can't meet. Now, it does help, by the way, just so we know, that, Churchill 4 has been halted. This is some market. It does help that that there is a president who seems to have not challenged directly the presidency. So there's entirely possible that you're going to see people owning Apple phones because they may not be, the government may not be against it, and there's also a shortage of Huawei. So you do have a lot of reasons to buy Apple. But do you have reasons to buy Apple up 3%? That is no. The answer is no. If you haven't bought Apple before they report, now you have to wait for it to go down. Or you have to say, I missed it. Now you can say, Jim, you say own it, don't trade it. Why shouldn't I just own it? Because I want to see, now it's up so much, it's unrealistic. You can buy a little if you want to, but it is quite unrealistic to bet that this stock is going to continue at this pace because it's not the way Apple trades.
All right, and with that, Jim, let's go on over to our Action Alerts Plus show to tell investors how to approach the market with all these earnings this week. Thank you for joining us, guys. I'm Katherine Ross, and we'll see you tomorrow.